TheoTrade. This is Don Kaufman. June 30th, 2020, seconds after the market has closed here on this Tuesday afternoon. The S&P's spurting to the upside. But let's get down to business. What really kind of drove a little bit of today's rally and what's imperative to understand for the remainder of this week. One of the first things, and I think the most important thing to denote out of the entire marketplace, it's not even about what drove the marketplace here. Push it all aside, okay? One of the first things that we want to elaborate upon is the fact that we just tagged minutes ago the upper edge of the SPX expected move. Now, the SPX expected move is $101. So for the most part, the SPX, well, we kicked off the week right around 3,010, and here we are. Just what? There's Monday, there's Tuesday. Remember, it's a holiday trading week, and here we are again on this Tuesday afternoon. We clipped right into 3110, hit the edge of the expected move, and pulled back off of it. Now, I cannot elaborate enough upon this simply because, we talk so extensively about not only the expected move, but about understanding the capacity for the SPX to literally move the entire marketplace. And if you haven't looked at the SPX and its expected move, again, that is a pretty much $101, okay, to a T. It's absolutely spot on. We pulled back in from it. Now, we'll push that aside for just a moment. It's just critical to understand, all right, here we are, 2 days into a 4-day week. And as I said, it is a 4-day trading week. I'll come back to that in just a moment. The next thing that's imperative to really look at is, hey, same kind of trading day. Everybody gets kind of lulled to sleep over here. When I say same kind of trading day, what do I mean? Well, in the weekend update, I was talking about this. We're getting huge moves on a day-to-day basis. I mean, just look, it's about big moves, but we're in the exact same range. So I don't want you to read too much into some of the action inside of today's trade, because for the most part, well, where are we today? The exact same place we were. For the most part, this is where we kicked off, Friday before some sell-side activity. That's where we were Thursday, and we were there, and we were there, and we were there. I mean, look, umpteen trading days in a row, and you're still, for the most part, a market with a nail in its foot. And that's okay. All right, so I don't want you to read too deeply into the fact that we actually bid a little bit higher. If you remember, kind of in the weekend update, we talked about the possibility of dropping back down into the gravity point. Quite ironically, on the open on Sunday, we hit 29.83, okay, and literally have ripped off of it ever since. Now we hit the upper edge of the expected move in the SPX, and we've pulled back from it. It's a party out there, people. But let's dig a little bit deeper, okay, into the marketplace as a whole. One of the things that I want you to see, actually, again, we're going to cruise over to the SPX because it pertains to the SPX. It's important. The SPX, and I was talking about this in the weekend update, has, all right, weekly expirations. And that is, for the most part, normally you have a Monday, a Wednesday, and a Friday. But this is a little bit unique. We had a Monday, a Tuesday, a Wednesday, a Thursday. And again, there is no Friday this week, all right, just so we're clear. July 3rd. All right, July 3rd, the market is closed for the July 4th holiday. July 4th falls on a Saturday, so July 3rd, we are closed, and that is the entire marketplace. So therefore, they moved the Friday expiration. They dropped it to Thursday, which happens to be none other than July 2nd. Now, the reason that this is so important this particular week, there's a lot of news coming out this week. What's the news? Well, tomorrow, and let's get to tomorrow, and then let's talk about a little bit about Thursday. So Wednesday, Thursday in here. Tomorrow, we have FOMC minutes. FOMC minutes. Okay, is there risk baked into the FOMC minutes? The answer is found right there. And then, of course, on this, again, Thursday expiration, which is the end of the week, we have what? Well, we have jobless claims, and we have the unemployment number. So I want you to be able to look at, if you will, the daily expirations here and be able to decipher which one has more risk. Unquestionably, it's right here. When I say right here, it's a Thursday expiration. They're baking a tremendous amount of risk not into the FOMC. They're baking a lot of risk into the fact that we have two different employment numbers. Again, it's important. The employment situation's coming out the exact same time as the initial jobless claims. Cats and dogs living together. Does anybody even care anymore? Remember, the last employment situation, they missed that by the broadside of not even a barn, like a state. It was supposed to be like minus 2 million, plus 2 million. What's 4 million amongst economists? Anyway, with that, there's a huge amount of risk baked into the remainder of this particular trading week. So if you don't like the weather, the reason I'm getting into this is if you don't like the weather right now because we're a little bit bid to the upside, you just wait. All right. Again, I have to reiterate another point in here, and that's why, tonight, the name of this, of course, is Big Moves, Same Range. The reason I want you to focus on when I say big moves, okay, the ranges on a daily basis are nothing less than monumental. And I think this is putting everybody a little bit to sleep because we're actually trapped, if you will. And again, don't get too confused in some of the lingo right now, because I am talking about this range, but then I'm also referencing how large the daily trading range is. So really, really big moves on an intraday basis, but we're trapped, if you will, in the last 3 weeks in the exact same trading range. And that, people, again, this combination is very, very dangerous in a short period of time. I'll tell you exactly why it's dangerous as well. You go out there and you continue to allocate. It doesn't matter how you allocate, where you allocate. You go, I'm going to trade Microsoft, and I'm going to trade Apple, and I'm going to trade some Caterpillar, and I've got a position in IWM. Listen to me very carefully. Everything right now is almost perfectly correlated. Okay? Almost everything is perfectly correlated. And I stress to you, there's times where I come in here on a weekend update or a nightly video, and I'll tell you, listen, this is the perfect setup here, perfect setup there. You got to forget about a setup right now. It doesn't matter what you think about the S&Ps. You're going to have news dropping on you, okay? From employment situation to FOMC minutes to anything political is going to drop on you. And it's dangerous right now because we've had very large intraday ranges, yet we're actually maintaining the exact same range. And as I told you a moment ago, people are like, well, I'm okay. I'm positioning myself into some Roku. Do you think it matters? Look at that correlation coefficient. Do you think it matters? All right. You're 91 stocks to the upside. In a big down day, what are you? Okay. You're 100 stocks to the downside. There's no place to hide right now. I'm going to bonds. Yeah, that ain't going to help you either. There's no place to hide. You need to keep that in mind, because if you've been allocating, and I got to stress this because I know I'm actually in this boat. If you've allocated any capital in the last 3 weeks, you're right in the middle of that range. That's the point that I'm trying to make with this. Well, that's why I'm talking about, big moves, same range, because when you're getting this wild oscillation in a tight area, again, popping out to the upside or the downside can be absolutely devastating. I'll tell you precisely, okay, what I personally am going to allocate capital to right now. And it just couldn't be any more straightforward. There are two major premises that I look at in here. First of all, if we blow to the upside, blow to the downside, I have directional risk. All right. So I'm telling you right now, I'm negative delta. My negative delta over here, I'm about, equivalent to about 2,000 SPY deltas. Those are beta-weighted deltas. So about 2,000 spider-weighted, beta-weighted deltas. Okay, so clearly I want us to go to the downside. So right now, knowing that we're actually in, this quote-unquote, the big boy range over here with big intraday moves, I fully, recognize and anticipate the fact that we could explode to the upside. Nothing in technicals is going to take you to a level where you're still going to get news dropped on the top of your head. We could explode to the upside or rip to the downside. Again, clearly I'm carrying negative delta, which means I ultimately believe that eventually this marketplace resolves itself a bit lower, but that's neither here nor there, right? Okay, my own directional bias doesn't matter. If you're just trading and you're trading autonomously, stuff that I would consider right now, okay, you're going to love this. One trade, I would use back ratios, back spreads. So you want to look towards back spreads. You want to look towards stuff called like back spreads, which is, and I would use bullish back spreads if we're going to explode to the upside. I think you've got pretty good of opportunities in there, especially if we're going to blow through the upper edge of the expected moves. The other thing I would look to is literally buy irons. I'm buying iron condors. You're like, what? What are you, crazy, man? Why not? Why wouldn't I want to buy iron condors? Look, volatility of the marketplace has actually pulled in a little bit. Volatility is pulled in just a bit in the marketplace, but at the exact same time that I'm saying volatility is pulled in, if I actually pull up like, let's use the spiders in this case, the ranges are still pretty phenomenal on a day-to-day basis. So why wouldn't I want to use something like a buy-side iron condor? You know, I'm not buying expensive volatility. If I cruise over to something like the spiders or the SPX, you go down over here, go to option statistics, and under option statistics, you see the current IV rank is 28%. You know, I'm buying volatility in the lowest, 1/3 I possibly can, 28th percentile. I think that's good to go, especially if we're going to explode to the upside, explode to the downside. And I've also this is actually a trade that was brought to my attention by one of the TheoTrade clientele, and I love that kind of stuff because people now are literally bringing trades to my attention. And this gentleman made a great point. You know, here in the XLE, we blew to the upside, ripped the expected move apart. Blew to the downside, ripped the expected move apart, exploded higher or lower, stayed inside of it, came to the downside. So we put on a bullish back spread here in the XLE today. In case we actually rip back to the upside, it's a nice, again, a bullish back spread in there. If you want to get really specific on this particular trade, all right, you've got it. I actually sold the 37s. Bought the 39 halves, sold the 37s, bought the 39 halves, about 31 days out. The skew was really favorable. Again, that's the kind of trade you want to do. In terms of like buy-side iron condors, hey, buy them till your heart's content. It's fairly safe right now, the fact that we're in a lower volatility stance in the marketplace. I am not overthinking, and I got to stress this again, I'm not overthinking any of the directional bias of today's move. Okay, listen, we tagged the edge of the expected move, we pulled back. And up until this point, everything that you've seen inside of the marketplace is normal. Okay, we're just throwing off some decent sized ranges in there. But again, we're right back inside of what we have been in for literally the last 3 weeks. Continue to allocate, but be careful what you allocate to. Once again, back ratios, buy side irons. That's where I'm sticking for the time being. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.